So guys, this is part 6 of the Shmita bear market series, and this is playing out exactly as predicted since my first part of this Shmita bear market series, which you can check out on my YouTube channel. So we're gonna get started today so we can update you guys on what has been happening since the Shmita. Are we still in the midst of the final rampage of the Shmita, or is the Shmita over? Well, I'm going to go into detail on what to expect on the remaining of this year, which will be you will find very interesting. So let's get started, guys. So yes, guys, hi guys, and welcome to Crypto Solutions, here to help you make the best decisions in cryptocurrency and in cryptocurrency technical analysis. So in today's S&P 500 and also Nasdaq and Dow Jones YouTube video, technical analysis YouTube videos, guys. So I'm gonna be updating you guys about what to expect on the Shmita. So, first I'm gonna be uploading this YouTube video on my Discord group because this is one of my great series I have here. So I'm gonna put it first on my Discord group first, and also if you would like to join my Discord group, you can do that in the description below on patreon.com/crypto solutions. And in summary, you can see when I'm buying, selling, long-term, mid-term, and short-term, like trading opportunities, and also doing technical analysis 2 to 3 times per day, and doing 2 to 3 technical analysis per week in that case. And I cover a variety of other altcoins, and you can also get first access to my early videos right here before I publish them, and you can get more updates more frequently there. So yeah, guys, and let's get started here. So first, like and comment and share this YouTube video with your friends. I really appreciate it, guys. This helps the algorithm. And also share this with people who know you, who are in investments using the S&P 500 and overall in the overall market, because this is going to be a very good video, guys. So yeah, guys, let's get started, and also click the bell notification. So yeah, guys, so this yellow lines right here, this is a fractal on the monthly using this. It represents this cycle of the 2001 dumpage, which happened on the dot-com bubble. And so right here, guys, I'm gonna show you guys a potential scenario for this S&P 500. So here, guys, on the weekly, let's just get started with the weekly here. So first, guys, so we have here a very obvious here: resistance, fake out resistance, weekly body candle close above, and then retest right here. So it retested 1 and 2 times and then follow through. So right now, for this to continue going higher, and for this to indicate and confirm that this is going to go higher, this has to first go above this level right here, which is above this $4,326.68, because that will indicate a trend change right here, because you're seeing lower highs here, lower highs, and still lower high at the moment. And this movement like this will signal higher highs here in continuation. Okay, that's the first confirmation for this, using the higher highs and higher lows normal strategy. And so also I drew this Fibonacci retracements a couple of months ago. And so in summary, we already have various dead cat bounces, as I already predicted on my previous bear market series of the Shmita. So here, guys, a quick summary. If we put here Fibonacci retracement here, it's very easy. It's very easy to determine. So we have various dead cat bounces. Boom, retrace, get rejected here on the 0.5 as a minimum, then come back here and then make a lower low. That's called a dead cat bounce scenario, where you have a drastic downtrend, rebound, and if it can't get above that golden pocket and also that 0.786 Fibonacci retracements, then you will most likely see a continuation to the downside, a lower low than this one. So that's one dead cat bounce scenario. So, and if we extend this like this, like so, this, another dead cat bounce happened here. Retrace, rejected out the golden pocket, and new lower low here. Second dead cat bounce. And so here we already have two. Let's see here if this was a dead cat bounce scenario quickly from here to here. It's very easy to do right here. And yes, kind of. So I would put it like this, like this. This is more relevant there also. Boom, rejected on the golden pocket. Boom, new another new lower low. So we already have three dead cat bounces there. Okay, so the reason I'm counting them is because I'm going to show you a strategy I already discussed before in my previous Shmita series. So here we're having lower lows, okay, and also lower highs. Right here we're having higher lows, higher highs. So far this is a determining factor if this is gonna break this to confirm another higher high here, like 1, 2, like 1, 2, and 3. And also it would be a good scenario for this level to also break above here, so we can have 1, 2, and 3 there. So that would be another confirmation. So but we have three dead cat bounces. So okay, and now if you look at this, I'm using this Fibonacci trace and here to here, and this time it's holding, got rejected out of the golden pocket, but it held that 0.382 Fibonacci tracing. And I told you guys that that as long as that level holds after getting rejected on the golden pocket, if it happens, then that is still a good continuation to the upside as long as it holds this 0.382 Fibonacci retracement after it gets rejected on the golden pocket, which is the yellow lines. Okay, so here rejection, support, now rejection on that 0.786, come back, still holding above, then again retest. Okay, so that's very interesting. So in summary, what has to happen for this movement to continue going higher using the Fibonacci retracement? So first it has to get above that golden pocket. Right now we're above there. In this case, let's say 2 to 4 weekly body candle closes above the 0.786 Fibonacci retracement, above this $4,133.16. And right now, guys, look at this. So you're seeing this is the weekly. So this is the line that has to be held. So you're seeing here one weekly body candle close, and then like a fake out to the downside. Here another weekly body candle close, the second one held, and now this is still holding as support and following through. So that's looking looking promising. So that's a good indication that this has a high chance so far, from what I'm seeing here, of continuation to the upside because of holding this 0.786 Fibonacci retracement. If you go to the previous dead cat bounce scenarios, I'm gonna do it quickly, so I can do it one more time so I can show you guys. When you put these lines over here, you can see that they get rejected on the golden pocket. They don't even reach this 0.786 Fibonacci retracement, like around here. So you have the retracement, rejection, dead cat bounce, then we extend the line like this, and again, boom, rejected on the golden pocket, not even reaching that 0.786 Fibonacci retracement, and then coming back here after losing that 0.382 Fibonacci retracement as support, boom, dead cat bounce. Okay, so yeah, it keeps going on and on and on. So it's normal at this point. That's part of the technicals. So in summary, I'm seeing here that this has a good potential for this to continue going higher as long as it holds this 0.786 Fibonacci retracement. Okay, if that level gets broken, that's weakness, and you have to watch out for a potential dead cat bounce scenario. But the dead cat bounce scenario will happen with almost a guarantee if this 0.382 Fibonacci retracement gets broken as support. Grid gets broken. That will be closing to that will be closing, let's say 2 to 4 weekly body candle closes below this $3,790 with 17 cents. Okay, that will be this red line. Okay, so it's very important for that to be held. You see that three wicks. Look at this. After the rejection of the golden pocket, it held the red line, followed through, and then rejection, but still it's above that red line, and we're having that follow through. So that's why it's very important for you to take that into consideration. Okay, and so the dead cat bounces. So we have three so far, and the reason why I'm mentioning that is because here, if you need help in the cryptocurrency market, had any questions, investing in short-term, mid-term, and long-term, I have an elite VIP crypto investor membership, which I cover 2 to 3 times per week. Technical analysis on various cryptocurrencies. It can be Bitcoin, XRP, Ethereum, Chainlink. It can be HETS, it can be Binance, it can be Quant, ISO 222 tokens, it can be IOTA, XLM, etc. And I also post it's like a signals kind of thing, but it's more towards me showing you what I'm doing in this case, which is trading in the short term and mid term. I put on trading opportunities, which I'm going to show you right now, which are right here when you're seeing the midterm personal trading opportunities. Like this, I update you guys on my trading opportunities and when I'm looking to buy or take profits or sell. Also, when I'm doing dollar cost averaging, I also notify when I'm buying and selling which specific cryptocurrencies. This is not financial advice. But this can be used as educational, investigation, and also entertainment. So, and also, if you have any specific questions about if this cryptocurrency is good, what about this one? Will it be in the future? What will be the most likely outcomes? Things like that. I can definitely help you with that. I also take into consideration the total solar eclipses, the total lunar eclipses, the Shmita cycles, and other very, very important indicators which I personally use to determine near bottoms and near tops in the bear markets and bull markets for the Bitcoin price. So yeah, if you need help, you can definitely click in the Patreon link in the description below, patreon.com/cryptosolutions, and that's how it works usually. Like I have the $50 per month in this case crypto portfolio investment review, but that will be just one payment, so it will not be a per month basis. It will be just one verification. So if you're interested, you can definitely click on my Patreon link in the description below, Crypto Solutions. It will be patreon.com/cryptosolutions, and I will see you guys there. I really appreciate it, guys, and I will help you as much as possible. I will see you right now there, guys. Have a nice day, guys, and take care, guys. Let's see here. On this cycle, this was the dot-com bubble right here. So we're gonna count one more time the dead cat bounces we're seeing here, okay? So here, guys, we're gonna put first one here. This is a dead cat bounce scenario. Let's see. It happened here, okay? It's very clear. You're having here retracement, reject on that 0.5, lose that red line, that 0.32 Fibonacci retracement, and lower lows. That cat bounce, that's one, okay? That's one. And then this is another one. If you put it like this, boom, and I'm gonna put it here so you can see. Like this, and then again you're seeing again, boom, rejection, pullback. So it's very consistent. So that's why we have two right there, two dead cat bounces, another one right here to here. Let's see, come on, trading view there, and there, pullback, got rejected on that 0.36 Fibonacci tracing, but it didn't help the support like I mentioned, guys. This 0.786 Fibonacci tracing has to hold as support for this to continue going higher with a high likely probability, okay? If it gets rejected and then loses this red line, as you can see right here, support, after, okay, retracement, pump, go over here. It held support for around, let's say 6 weeks, but eventually the more you test support, the more likely it is to break eventually. And the same for resistance. The more you test resistance, the more likely it will get broken as resistance also. So, and as soon as you literally lost that 0.382 Fibonacci tracing right there, literally break down, confirmation as resistance around 2 times, and then boom. And then you have another dead cat bounce scenario. So that's 3. That's 3. And this is another one. Okay, we have 3 dead cat bounces so far on this dot-com bubble. And then again, here to here. Okay, just a second. And beautiful. This is such a beautiful, wow, look at this. Boom, pull back, rejection on the golden pocket, hold that red line, rejection again on that golden pocket. He tried to hold that red line, but as soon as that red line got lost, boom, massive downtrend right there. And you know what's very interesting about this? You know what's very okay, so this is the 4th dead cat bounce scenario. This is 4. And then we have had the bottom around this. And you know what's very interesting, guys? This double golden pocket rejection came around almost the same time frames. Oh wait, no, that was a different time frame. No. Okay, so here the Shmita cycle on this dot-com bubble was around here. Okay, I'm gonna show you guys. From 2000 to 2001, that was around this Shmita. So you had it around this time frame. Okay, just a second here. So you have 4 dead cat bounces before you had that bottom right here, right there. So that means that potentially, in order to see a potential bottom, we have to see around, it doesn't have to be exact. We already have 3 dead cat bounces, but it has to have around 4 dead cat bounces for this to potentially have a bottom. Okay, so far, as you can see right here, also if we draw this line like this, so here on the dot-com bubble, you see that as soon as the Shmita started on the 7-year cycle, pull back, and then after 1 year, you still see more pullbacks. So from the end of the Shmita, this is an almost exact estimate right here. This literally from what I'm seeing here, this from the end of the Shmita around this time frame to the bottom, it took around a year later, almost to the exact literally month. This was on October. So after a year of the Shmita ending around October, is where we found that bottom scenario right here. So here, and again, on the 2007 and 2008, also we can compare here. So I'm gonna put it around where the Shmita started on the 2007, which is on September, it was here. So you can see there. That was there, and then here on the 2008 Shmita around there. That was the end of Shmita, and then you also see more follow through after the Shmita ends. But this one lasted from the end of the Shmita to the next year. It ended on bottoming out around March. So this bottom came through earlier, okay? So, and it was because the Federal Reserve also bailed the whole economy. So in summary, we're gonna see the bottom around a year after the Shmita, which usually happens. So as soon as you see the inflation rate, not inflation rate, but the Federal Reserve, like printing a lot of money to bail out the economy, that is the signal that you're gonna see that the S&P 500 bottom around that level, around those time frames. Here it took longer. Around here it took at the end of the year. On this Shmita, it earlier during the year. This one is looking more to be bottoming out at the end of this year, because the Shmita already ended, but still after 1 year we still have more continuation to the downside. So if we were to extend this from the end of the Shmita run here to around September here to October, we still have all of this time frame. So I'm gonna put it here. We still have, I'm gonna put it on October, okay, October 2nd. We still have all of this time frame for this. So I'm expecting eventually something like this, boom, and then start going higher. The reason why is because still we're having a bounce over here, but the Federal Reserve still hasn't bailed out the whole economy just yet, okay? So that's why if there's no more money printing at this moment, there's almost no reason why the S&P 500 has to continue going higher. But if you're looking only at the charts, then this is the confirmation would be here. Right now, this is signaling that this has a high certainty of continuation to the upside, okay? Because remember, the fundamentals and the technicals are not being shown both at the same time. You may have the fundamentals stating that it's very bullish, but the charts tell you another story. So that's why combining both is a very great and powerful strategy. That's why I look more at the charts, because usually the charts would give you more of an accurate prediction of the price compared to just looking at the fundamentals in the near term and midterm. That's the signals. Fundamentally, that's more on the long term. Technicals are more into now, midterm, and long term also. But it is more important to look at the technicals also. But here, looking at the S&P 500, fundamentally, this has to continue going lower. And also using the Shmita, this has to go lower, okay? Not has to, but has a high chance of this continuing going lower, okay? And where can you find potential bottoming scenario also using other indicators? We can use here on the monthly, like this bottom, if we use this, we're gonna show you quickly. Here, let's use some moving averages right here, okay? So around here, the bottom came when this price came below that orange line, which is that's the 100 SMA, the 100 simple moving average in a monthly time frame, and then boom, and then bounce. Here, this is the 100 simple moving average. It's around $3,029, $3,029 with 21 cents. If the price were to go from there to there, that would be another 27% pullback. And right now, the market has only pulled back, this is using the S&P 500, has only pulled back from here to here around 27%, okay? So that is also a potential scenario. Let's see right here what we can use here. Here it came close on the 2 monthly, came close to this orange line. This has a long shot. So yeah, so far I'm gonna just, from what I'm seeing here, this has more continuation, but expect at the end of the year to be one of the best buying opportunities for almost any asset, literally. Yeah, when I mean almost any asset, I mean the good assets. You know, Bitcoin, S&P 500. If you would like to buy it, also you have the Nasdaq, the Dow Jones. So you have many different good assets there. Not financial advice, but this is what I'm seeing here. So my strong bias right now is more continuation to the downside because of the Shmita. Still, this has until the end of this year for this to play out, and it can do something like this and then very rapidly. So that can also happen, okay? And Shmita, that's one of the signals. Dead cat bounces, we have around 3 dead cat bounces so far on the weekly. So, and also I want to show you guys here that a potential scenario for the bottom can be around these levels, okay? And also, I have seen that the S&P 500 likes to do this kind of like three peaks. Like, for example, like, look at this. It's just, I found it interesting. Like, pull back, pull back, pull back, and then continue to the upside. And then pull back. Okay, wait a second here so I can show you here. And this is very interesting. You have a pullback, pullback, pullback. Usually, it signals three lower lows and then boom, massive uptrend. Here, let's see what we got here. So we have potentially one here, two, and then eventually another one potentially, and then bounce from there. And this will be also in alignment with the end of the year. So that's why I'm putting emphasis on that also. Okay, so here guys, that's what I'm seeing so far for the S&P 500 so far. So in summary, expect the final end of the impact of the aftermath of the Shmita to be at the end of this year, 2023. Okay, so that would be a good time frame to buy. Not financial advice, but that's what I would be most likely doing by buying Bitcoin and other very good cryptocurrencies. Because in summary, if the S&P 500, if you believe so much in the S&P 500, whatever, if the S&P 500 goes up, Bitcoin will go up anyways, and even more. So it's because it's an inflation hedge asset. So in summary, if you know that the S&P 500 is going to go up in time, then in my view, I buy Bitcoin, other good altcoins, and that's it. I get more benefits of, because they move in synchronicity usually. So it's obvious for me, you know. It's not financial advice, but that's what my perspective on it. So we're gonna go to the Nasdaq so we can update you guys also about that. Okay, the Nasdaq. So guys, the Nasdaq has been forming again here. If we extend this Fibonacci retracements, since the last time I did technical analysis in this was here, just a second, boom. I'm gonna put it like this, and beautiful. So this is also a good confirmation from what I'm seeing here. So in summary, guys, we're seeing here like a descending wedge kind of scenario, because we're seeing here resistance, support around here, resistance, support around here, then resistance, and then break out of that, confirm here, and follow through. So according to this pattern, this descending wedge, this has a price target of the previous all-time high for the Nasdaq around here. So here, if we use the Fibonacci retracements here, again, pullback, then got rejected here on this 0.5. It lost this red line, but remember, this is a different stock. This is a Nasdaq. At least with the S&P 500, is more relevant for if it loses that red line for this to then continue going lower. Nasdaq so far has been rebounding. Boom, rejection, come back here, rebound more, then go above that golden pocket, come back here, follow through. And this is bullish for the Nasdaq in the short term and midterm, because here this is so far holding or above this 0.786 Fibonacci retracements. And usually, and not only that, you have a one rejection here, weekly body candle close above there, then support, and then support, and then support, and support, and follow through. That's very bullish, okay? This is looking that like this wants to continue going higher, okay? From what I'm seeing here, with a high probability. So most likely, this is going to form a higher high here, a higher high here, like this. Because this Nasdaq price still is forming lower highs. But here, it looks potentially with a high certainty that this is going to create a higher high than this one. Because this has been experiencing almost the same thing as the S&P 500 here, guys, which is the dead cat bounce here. Got here. It's very easy. So let's see here, guys. So it's like this. Again, the same thing over again. You got pullback, rejection of the golden pocket. Usually when you break that red line, boom, that cap bounce scenario. That's one. And then we're going to count it another, no, again here. The NASDAQ here, boom, one. Let's see here. Put it here. And again, another dead cat bounce, boom, pull back, rejection of the golden pocket, and then lose that red line, and then boom, follow through. Second dead cat bounce scenario. And you see that in neither of those dead cat bounces, the price was neither above that 0.786, okay? So you can see the consistency of this. And now, the Nasdaq has only had two dead cat bounces usually using the weekly time frame. So we have pullback, then rejection of the golden pocket here, and then go above the golden pocket, and then also go above the 0.786 Fibonacci tracing. And not only that, but it's holding weekly body candle closes above that. That's very bullish, okay? Using the Fibonacci tracing strategy, okay? And also using this descending wedge, this is also indicating two bullish scenario to the upside. Still, I believe this has more downside, but so far the tentacles are indicating that this is forming another, yeah, most likely a higher high here, and this is potentially going to start breaking and also converting a bullish trend to the upside in the midterm, okay, in the short term and the midterm, okay. But still, this is the Shmita Wrath, so still we have until the end of the year to, even if we do something like this doesn't guarantee that this will continue going higher, unless the Federal Reserve just prints $10 trillion out of nowhere. That would be the only scenario I'm seeing, like this is going to continue going higher, because right now the fundamentals are not good right now. So that means that eventually, and also because of the tentacles on the Shmita, also in combination with the fundamentals is we're seeing recessions. We're gonna see a most likely a recession, and also not only that is the aftermath of the Shmita. So we can still go higher here and still have time to go through like this, and this, it's still November. Look at this. Look at the bottom of this of my screen here. It's still November, and it can still do something like this. That's what I'm expecting, most likely, because of the Shmita cycle, okay? And so, if we go to the previous one here on the dot-com bubble, let's see here. It was here. Now, this was a massive 83% pullback. Oh my gosh. So, in this NASDAQ, if we use the dead cat bounce scenario strategy, which is one I invented myself, like counting the amount of times to potentially determine a bottom here. So here we're seeing the same thing over and over again. Ah, come on, this trading view, man. Ah, come on. Okay, so here we have one dead cat bounce here, pullback, rejection on the 0.5, and then boom. After losing that red line, boom, lower low. That's one dead cat bounce scenario. And again, if we put this other Fibonacci trace in here again to here, again, rejection, pullback, rejection of the golden pocket here 3 times, lose that red line, and then another dead cat bounce scenario. That's 2 dead cat bounces on the weekly, okay? And then here, let's see, here, this, let's see if this was a dead cat bounce here. So let's put it like this. It's from this top to here. Come on, and there. Yes, this was also another dead cat bounce. Pullback, rejection, lose a red line, new low. We have 3 dead cat bounces there. And if we extend this line like this, from this low and there, again, we have we have another dead cat bounce here on the 0.5. Also, if you want to put it like this, using this high here, still this would be still in confluence. Boom, rejection on the golden pocket, lose a red line, continuation to the downside, another low. You have 4 dead cat bounces there. So 4 dead cat bounces, so you can have that bottom around here, around there. So, and again, this Shmita ended here, and then 1 year after, around October, it bottomed out. Okay, so that's a good indication. That's why that's why I say watch out for that. And so if we use the 2007 and 2008 market crisis, housing crisis there, we have various dead cat bounces. So we have here again one here. I'm gonna put it quickly, as quick as possible. It's just this lines over here. It's just trading view just keeps man, changing those lines. Boom, rejection on the golden pocket, lose that red line, dead cat bounce scenario. Okay, that's one. And then we have a second one here. If we put it like this, here to here, very clear. Again, pullback, rejection on the golden pocket, and then eventually losing a red line. Try to regain that as support, but it gets rejected again on the resistance on the 0.5 Fibonacci trace, and then lose a red line again, and then follow through. So we have there 1 and 2 dead cat bounces. So 2, and not only that, you can also count this one. Even this was even showing that also. You see how consistent this Fibonacci tracings are? That's why I use them. It's very accurate. Boom, boom, rejection, lose a red line, boom, no, another dead cat bounce. So I would count that also as 3. Okay, 3. And then just so we had 3 dead cat bounces there. Okay, I'm gonna put it here as the area as text here. Put it here. 4 dead. Look at this, dead cat bounces. I'm gonna copy this. Literally, I'm doing this. Wait, I'm showing you guys here. 4 dead cat bounces. And then again here, you have text, then here, then paste, and then paste here, and 3, and there. So we have 4 dead cat bounces for the bottom. Here we have 3 dead cat bounces. Here so far we have 2 dead. Let's see here. Let's see. We have 1 and 2. So we have 2 dead cat bounces. So potentially we have 1 to 2 more dead cat bounces. And I would say 1 more, because that would be in confluence, because we have 2, and then right now this is breaking out of this dead cat bounce scenario. But the other scenario I'm seeing here, I'm gonna hide this so you can see what I mean here. So I'm gonna hide this quickly. I'm gonna show you guys the other Fibonacci retracements. It can be from this high to this high. Look at this. There. This can be another dead cat bounce, guys. Okay, why? But you have the pullback. You're having a confluence on those lines. It's getting rejected so far on that 0.5. Okay, so the bullish scenario. For this to have a new all-time high, in this Fibonacci retracement, this has to break this golden pocket, and not only that, it has to also break that 0.786 Fibonacci retracement, and it has to stay above those lines. Okay, that would be above here. That would be above this $15,148.91. Okay, that would be a pump from here, from here to here around 14%. And like, I would expect that to happen if the Federal Reserve, United States, just, oh, let's print $2 more trillion or $5 more trillion, something like that. If that happens, then those fundamentals will confirm to me that this is going to lead into a new all-time high. Okay, but so far the bias is on the bear scenario. Okay, we have the Shmita aftermath, we have the dead cat bounce scenario also in play, and still this is not forming those higher highs there also, but this can continue going higher like this into the golden pocket. Okay, so yeah, guys, that's what I'm seeing so far for the Nasdaq. Gonna see if there's some confluence using the dead cat bounce scenarios, right? The simple moving averages here. You can see that this pink line is a 200 simple moving average in the monthly time frame. So this is a very good buying opportunity if the price goes to this pink line. You see it right here. Went below and then rebounded and eventually hit higher. Here, man, that's insane. That would be around 5,540, $5,484 with 76 cents. Man, that would be insane. But yeah, it can happen. But so far, that's what I'm seeing. Just a second here, guys. Okay, so yeah, that's what I'm seeing so far for the Nasdaq. And let's go to the Dow Jones as the final chart we're gonna cover today for the moment, guys. So yeah, guys. Okay, guys, so let's see. The Dow Jones. Let's put this in the weekly. Okay. And then let's see here. So, okay, I'm gonna delete these lines here. Okay. Okay, so very easy, guys, very easy. You have resistance, support, support, resistance, support, support, resistance, resistance, and then break out of that, and then potentially almost retested those lines and then follow through. So right now, guys, this is a descending, like broadening wedge, and this, if we measure out the target like this, the target will be around here, like this. According to this is the target, $40,225, if this can hold this as support. But since this is a Shmita, most likely this is not going to hold. Okay, high certainty. Okay, Shmita cycles is where technicals, if you're looking at patterns, usually don't play out if they break out to the upside, usually on Shmita cycles. So here, guys, on the Fibonacci retracements, we are seeing pullback. We're seeing multiple rejections on the golden pocket, and you can see that that red line was held as support. So you can see the confluence there. So in summary, let's see how many dead cat bounces here for the Dow Jones. Okay, so I'm gonna make it as quick as possible. Here to here, there. Again, pullback, rejection of the golden pocket, lose that red line, low, low. Dead cat bounce, we have one there. Another one here, let's see. Again, almost the same thing. And there. And then pullback, rejected on the golden pocket, lose that red line, low, low. Two dead cat bounces. Okay, two dead cat bounces. Then if we put it here, from this high to here, again, happened the same thing. Pullback, rejection on the 0.5, lose that red line, another lower, another dead cat bounce scenario. Three dead cat bounces there. And the same again here. Okay. And this one, the same. Pullback, reject. This one was rejected on the 0.786 Fibonacci retracement, and then lose that red line, lower low. 4 dead cat bounces so far. Man, 4. And then this one so far is holding up very good so far. We have 4 dead cat bounces so far for this Dow Jones. We can have the final one coming very soon here, like something like this. Okay, so if we look at tentacles right here, very interesting there. So here, guys, this for the Dow Jones, I'm gonna draw those quickly, those Shmita lines there. That's one. Put a red. Another one here quickly. Then in September, it was here around there. That was. And we're gonna do it again, but for the previous ones here. So again, I'm gonna do it as quickly as possible here, so you can see exactly how do I put the lines here, just in case. And okay, let's see. No, not there. And there. That's one. Then and another one there. You can see the follow through after the Shmita 1 year later. I'm gonna put it here. Follow through. Okay, and again here. We can put it here quickly. 2007 and there, and then here 2008 September there. You can see the confluence. It's there. After 1 year, boom, continuation to the downside. So here, this is looking like it's going to do that also, most likely. And we have here 4 dead cat bounces here, okay? So we're gonna put it quickly here so you can see here, me documenting this experience. So 4 dead cat bounces. Gonna put here, copy, so you can see, and beautiful, like this. 4 so far. For the bottom and the Dow Jones here, wow, it's a lot of, wow, so much volatility, man. Wow, this is a very interesting scenario here. So let's see here. Okay, so we're gonna count it like this quickly. This is the start of the Shmita here and there. I'm gonna do it quickly. Pull back, rejection on the golden pocket, lose that red line, and then lower low. Look at how beautiful that's, it tried to hold that as support, that red line. Pull back here, rejection so many times here on this golden pocket, and also the 0.786 Fibonacci retracements. It's like boom, hold that red line, boom, hold it, boom, 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 hold, man. You see how, yeah, it's there. It's a 1 dead cat bounce. Here, literally, boom, and then it held support on that 0.786 Fibonacci retracement, and then tried to go higher, but it didn't follow through. And now this is the very low likely scenario if it happens, where you're seeing a follow through on the 0.786 Fibonacci retracement, holding support out above there, and then continuing going higher. That's rare for that to happen. Usually when you hold that 0.786 Fibonacci retracement, you usually form a new higher high there, usually. But since this is a Shmita, then yeah, it happens there. So this ended up being a dead cat bounce scenario, man. Wow. And you have 2 dead cat bounces there. And again, put it like this. Let's see here. Man, it's so volatile. Let's see if it happened here. No. Here it happened again. Wow, this Dow Jones tried to put up a fight. Wow. Down, rejected here on the golden pocket, hold that as support is 0.5 Fibonacci trace, and then it tried to hold support. It tried to hold support above that 0.786 Fibonacci retracements, but it held it around 2 weeks and then lost it. Then lose a red line and another dead cat bounce scenario. You have 3 dead cat bounce scenarios right there. And again, this to here, again another dead cat bounce scenario. You see the consistency. It's so obvious. It's so obvious, man. Boom, rejection on the 0.5, lose a red line, low. Okay, 4 dead cat bounces, and then that was the bottom, and then started forming higher lows here, and eventually started going higher. Okay, so here on this .com bubble, there was around 4 dead cat bounce scenarios. So man, so interesting. Put it here, literally copy and paste the same thing. 4 dead cat bounces there, beautiful. And let's see the time frame it bottomed out. October, of course, October, there, October, around there. And we're gonna count this one for future reference also, so you can see the consistency, guys. Even if this is taking some time here, this is taking a lot of time, but you can see this is something you can learn and you can apply for yourself. It's obvious, so obvious, literally, so easy. It's just look at this. This is the 2007, 2008 Shmita cycle. So here, again here, again, over and over again, we have 1, boom, rejected, lose a red line, low, dead cat bounce, again here. See how easy this is? It's so easy. Boom, rejected, lose a red line, and new lows. That's 2 dead cat bounces. We can even keep extending this. Let's see here. We're gonna put it like this in this case. No, not that one. No. Okay, and let's see here. Follow through. No, this housing crisis was, wow. This one was very severe because it didn't even. It had 2 dead cat bounces. It kept doing more dead cat no, 2 dead cat bounces there. Okay, 1, 2, and then it was a straight line just going through like this. Maybe if we go to the daily, we can see the dead cat bounce scenarios on the 2007 and 2008. Maybe, let's see here. Yeah, kind of. Let's see. We can use the high from here. This high. Come on. You can see here. Let's see. Yeah. Yes. This is. Yes, we can also use a daily, but the weekly usually is enough. But in this exception, then just very boom, rejection, and lose a red line, and then boop, new low, that kept bounce again over and over and over again. It's just, man, 3 dead cat bounces, and then again we're gonna see here if we use this high. Let's see here, this high over here and to this one happen again. It's so obvious, man. Boom, boom, rejection, red line, boom, lose a red line, pull back, rejection a lot of times for that golden pocket, lose a red line here, and then new low. 4 dead cat bounces. So it's so just yeah. That's so interesting. Literally 4 dead cat bounces there. And both ended up being the bottom for both. That's so interesting. Just found out that it was exactly 4 for both Shmita's bounces. And yeah, that's it. Look at this. I would just paste it. Just look at this. Boom. So, yeah. That's why this strategy I use it. From what I figure out, it's so obvious. It's just I call that's my strategy, okay? The dead cat bounce strategy. Yeah, by Crypto Solutions. Okay, so yeah, 4 dead cat bounces bottom, 4 dead cat bounces bottom. But in this one, we already had 4 dead cat bounces, but still no bottom. Potentially maybe there. But this one, we can potentially have a 5th dead cat bounce scenario. Man, that's insane. Insanity. So yeah, guys. That's why in summary, this has to close 2 to 4 weekly body candle closes above the 0.786 Fibonacci tracing for this to continue going higher with a high likely scenario. It will be above this $35,167.16 all the way around here. Okay? If it loses this red line, you know what it goes, man. You know what happens. That cat bounce with a high likely scenario. Okay? So, and also bearish bias because of the Shmita 1 year after. Boom. At the end of the year. I will put a line, okay? So we can, for future reference. Okay, I'm gonna do more Shmita cycle series here. And we're gonna put it on here. This will be the blue line. So again, we can do something like this. Whee! Something like this. Boom. No, wait. Boom. Lower low than this one. Yeah. Boom. Something like this. That's my expectation because of the aftermath of the 1 year after the Shmita cycle. So it's not over just yet. So the Shmita is over, but the aftermath of the Shmita is the last continuation of the bearish movement, and then after that you're gonna see more continuation to the upside eventually, because aka Federal Reserve is going to bail out most likely the economy again, because or else almost every asset will fail in that case. But in the stock area and things like that, and businesses in that case, and yeah, United States. So they can't afford for almost all of the businesses in the United States to collapse. So that's why they have to keep doing this bailout of the whole economy. So yeah, guys. And the dead cat bounce scenario, we have the 4 dead cat bounces so far. But we can have a potential 5th one. Why? Because of the 1 year after the Shmita aftermath. Again. And this one on the .com bubble, the bottom came around October. 1 year after the Shmita, around October. The Shmita on the housing crisis came here on March. That was very earlier. That was very early, but it was because this was a drastic movement. Okay, this one is more of a boom, up down, up down, up down, and yeah. So here we're seeing an up down, up down, up down, up down, up down. It's not something like this. If this scenario, if after the Shmita ends, if the price action were to do something like this, like a drastic movement, then expect an earlier bottom. Why? Because when you have a drastic movement like this, which is caused mostly by recessions and, in summary, business failing, the Federal Reserve has to save those businesses by printing more money, which is the fundamentals for this to continue going higher. in summary. So when you see the recessions and the unemployment rate going 5 to 10%, those will be the percentages for a bottom, because the Federal Reserve also likes to print and bail out the economy usually when you have a recession having 5 to 10% unemployment rate. Now that is one of those that is one of those indicators which is very reliable, literally. Says, and it's all in confluence, because very drastic downtrend. Oh no, recession and economy, and most of the businesses of the United States is called are going. They are suffering. They need savings. They need someone to save them, which is the Federal Reserve, which is printing more money, and at the same time when you're having unemployment, so you're having the downtrend. The downtrend is caused mostly because of the fundamentals. In summary, less profits for most of the US businesses. Less profits means less employment. Less employment, recession. Recession, more unemployment. And in summary, so much downtrend. Who's gonna save that? The Federal Reserve with their bailing out. Bailing out means printing more money and then saving those businesses more employment, more profits, and more jobs. And summary goes up. But for that to happen, the price has to go down, most likely in a drastic way. Okay? Just like it did here. Okay? It's the same thing. They can't afford for this price to go too, they can't afford for this price to go too low. Okay? That cannot happen. Or else they will risk destroying the whole US economy, which they're most likely not gonna afford to do that. They're not gonna let that happen with a high likely scenario. It's not financial advice. Very drastic movement to the downside. Save the economy again. Drastic movement. Save the economy again. That's how it goes. And this is what I'm expecting after the Shmita. And usually those drastic movements come at 1 year after the Shmita. So that's why you have to watch out for that. So that's why I'm saying that this has more downside. Okay? Because of the Shmita and because of the fundamentals. So yeah, that's what I'm seeing for Dow Jones, guys. If you enjoyed this YouTube video, guys, I really appreciate it. If you stick along this whole video, I really appreciate you guys. And it seems like you're very interested in my analysis, and I really appreciate that, guys. So if you're very interested, you can go into my Patreon link in the description below, patreon.com/cryptosolutions. It will be on this screen, and you can see, and I can update you guys more frequently there, because there I put more of my updates there usually. So in summary, if you would like to see when I'm buying, selling in the long term, mid term, and short term trading opportunities on almost any cryptocurrency, I can also cover stocks if you would like to. Also, I can cover more frequently the S&P 500, the Nasdaq, the Dow Jones, and yeah. And also, if you have questions and things like that, which I can help you, I can definitely help you with that, guys. And you can join my Discord group in the description below using my Patreon link in the description below, patreon.com/cryptosolutions. It's very affordable, per month basis. I do it more to help people in general on the overall markets there. And yeah, it will be a more frequent updates on the general markets and what I'm looking to do before I publish them on YouTube, usually on my YouTube channel. So yeah, guys, if you enjoyed this YouTube video, guys, thank you so much for watching this YouTube video, guys. Leave a like, comment, and share this YouTube video with your friends, and also subscribe to my YouTube channel, Crypto Solutions, if you haven't subscribed yet, guys. And also click the bell notifications to stay ahead in the cryptocurrency market, and also in the overall market using my technical analysis YouTube video, guys. And also, if you have people who invest, I would recommend sharing this YouTube video because it would be very important. Because most people do not know this. Most of the people who know this are usually, most of them, because I have seen it myself, are usually people who have a lot of money. And yes, you have exceptions. and and also, that's why I would recommend doing that. But I would really appreciate it if you do so. You're not obligated, but I would really appreciate it if you share this YouTube video with other people who are interested in the overall market, so they don't get surprised and they don't get lost in the overall mainstream traps, which usually most people face. They believe the news and things like that about the economy, and most of the times they are wrong. This is the closest you can get to being as accurate as possible. And yeah, guys, if you need help in the cryptocurrency market, had any questions, investing in short-term, mid-term, and long-term, I have an elite VIP crypto investor membership, which I cover 2 to 3 times per week. Technical analysis on various cryptocurrencies. It can be Bitcoin, XRP, Ethereum, Chainlink. It can be HETS, it can be Binance, it can be Quant, ISO 222 tokens, it can be IOTA, XLM, etc. And I also post it's like a signals kind of thing, but it's more towards me showing you what I'm doing in this case, which is trading in the short term and mid term. I put on trading opportunities, which I'm going to show you right now, which are right here when you're seeing the midterm personal trading opportunities. Like this, I update you guys on my trading opportunities and when I'm looking to buy or take profits or sell. Also, when I'm doing dollar cost averaging, I also notify when I'm buying and selling which specific cryptocurrencies. This is not financial advice. But this can be used as educational investigation and also entertainment. So, and also, if you have any specific questions about if this cryptocurrency is good, what about this one? Will it be in the future? What will be the most likely outcomes? Things like that. I can definitely help you with that. I also take into consideration the total solar eclipses, the total lunar eclipses, the Shmita cycles, and other very, very important indicators which I personally use to determine near bottoms and near tops in the bear markets and bull markets for the Bitcoin price. So yeah, if you need help, you can definitely click in the Patreon link in the description below. Patreon.com/cryptosolutions, and that's how it works usually. Like I have the $50 per month in this case crypto portfolio investment review, but that will be just one payment, so it will not be a per month basis. It will be just one verification. So if you're interested, you can definitely click on my Patreon link in the description below, Crypto Solutions. It will be patreon.com/cryptosolutions, and I will see you guys there. I really appreciate it, guys, and I will help you as much as possible. I will see you right now there, guys. Have a nice day, guys, and take care, guys. Thank you so much for watching this YouTube video, guys. Have a nice day, guys. Take care, guys, and peace out, guys.